Hi, this is Kerry Artag with Wicked Stocks, bringing you the daily Apple report for Friday, October 6th, 2023. Before I click on the charts, just want to encourage you to please click like, share, subscribe to the Wicked Stocks YouTube channel, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Apple report, daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves on those stock picks. This week alone was McDonald's and UPS. Last week was Nvidia and AMD, on and on and on. You can see all of it for free for 5 days, no cost whatsoever, by signing up for wickedstocks.com. We offer a 5-day free trial up front. You can check out everything you like. If you don't like what you see after 5 days, you can bow out at no cost to you whatsoever. On with the charts. Let's take a look at the weekly chart. We did come off this long-term support last week that is presently this week at 166.24 to 167.66. This descending flag we settled above in May that set off a long-term buy signal, a long-term show of strength that I think is still intact despite the last several months of bearish retracement back to this long-term support. I still think 228.17 remains a longer-term target that may well be realized by this point next year. Make that over the next 3 to 5 months if we were to close soon above 90.27, 190.27. Now that's not going to happen, I grant you that. We should, though, over the next month or two, reach 190.27, where we could top out on a monthly basis, possibly fall back into the mid 160s. We could fill this wedge out for the next several months, but it would be a settlement above 190.27 that would set up another significant leg up that within possibly 3 to 5 months we could actually reach 228.17. So that is the big picture. Now, if we were to close below 166.24, that would need to be by a 1% margin this week. I don't see that happening, but if we did close today, the week itself, at 164.57 or lower, and you should know that because we need to be clear about the sell signal that could emerge and what would define it. That would be a 1% violation of 166.24, a settlement at the end of a week by 1%, 164.57 or lower. That should then, within a couple of weeks, yield this narrowing zone of support between 159.17 and 162.40. And over the following, 2 to 3 months would allow, and here we go, 131.62. So I've been mentioning how I'm showing a longer term objective. If we were to close below 166.24 by a full 1% margin, the low 130s then anticipated as a possible 2 to 3 to 5 month downside objective, giving plenty of respect on the way down for you 2 to 3 week swing traders for this narrowing zone of support presently between 159.17 and 162.40. But we're a long way from that right now. Let's talk upside, given the fact that we've been testing this significant support, or we did last week, and we've come off of it nicely. Let's take a look at the daily chart. We are right at this trend-defining resistance. This is near-term resistance. And from here, 174.95 to 175.36, we can fall back to this 166.24 to 167.66 region, which is right about here on the chart. Over the next, by the end of next week, we could fall back to the long-term support that is once again between 166.24 and 167.66. So we are still below this area. And so then let's talk downside, if only for the day itself. I will mention that there is 170, 174. So holding below 174.95, this area, where are you? Where are you? Here. Holding below this, we'll keep this in reach today. We'll keep 169.92 in reach over the next few days. So this area can be sold. How should I put this? It can be sold for those of you who have been long, and many of you may be long right now, above the 166.24 to 167.66 region that we tested last week. If you're a near-term 1 to 2 week swing trader, this is your area to take profit. But I will say that if we close today above 175.36, you should jump back on the long side, get long, especially if you're a 2 to 3 week swing trader, because I think over the next 2 to 3 weeks, we should push into the 180s. The mid to upper 180s would be our objective. I see this area, as I said at the top of this video, as a 1 to 2 month target anyway. Holding above 167.66 will keep this formation on the weekly chart at 190.27 in reach over the next month or two anyway. Closing today above 175.36. Let's make that 2 to 3 weeks where we could top out through November trade. So 174.95 to 175.36, meaningful pivot point as we move into later October, early November, below which we can fall back to the wrong chart, to the 167.66 region by the end of next week. And for the day itself, 170, 174, you can see able to contain intraday selling pressures, possibly for the day. If we break 170, 174, 169.92 is in reach today where we can place a daily low. And if we close today below 169.92, you can see this long-term support at 166.24 to 167.66 is likely Monday, Tuesday of next week, where we could bottom out, as I said earlier, not only through the rest of the year, but quite possibly through all of next year, because above which a long-term buy signal remains in effect. Let's talk upside today, that if we do close above 175.36, this 180.90 level is likely within 3 to 5 days. And you can see that here, able to contain session strength. We could fall off from here for more than a day. So, it's not straight up. It is sort of rotational highs and lows on the way up over the next 2 to 3 weeks into the 189.55 area if we close today above 175.36. If we push through 175.36, I do see 177.65 as a realistic intraday objective. And if we close today above 175.36, that's actually considered kind of an eventuality as long as we continue holding above this long-term support area, 167.66. So closing above today, 175.36. I don't see a good reason to be short Apple as we move through the rest of October trade. We should, by the end of next week, reach this 180.90 formation, and over the next 2 to 3 weeks, 189.55, where you can unload long positions and perhaps even go short well into November trade. And by the way, if settled above, would represent our next significant long-term buy signal as we move into Q1, Q2 of next year, anticipating 228.17. Possibly within 3 to 5 months of closing above 190.27. I have said a lot in this video, but I don't think there's really anything else to say. I will leave you with this chart, the most appropriate for the day itself. Please click like, share, subscribe, and check out wickedstocks.com for this week's McDonald's and UPS picks, last week's NVIDIA and AMD, as well as our Triple Q and our SPY analysis and our weekly S&P 500 and so forth and so on and all and on and on and on and on. And you get it all for free for 5 days. I'll be back Sunday afternoon with Monday's Apple, and you have a great weekend.